I'm Nigel Pocklington. I'm the Chief Executive of Good Energy PLC. We have seen quite a pickup in interest from retail investors over the last 6 months or so. So I was very keen to come along and do these presentations and meet people as well, and really just take people through our story and our strategy. So start with who we are. So Good Energy has actually been around over 20 years. It was one of the original challenger brands as the UK's supply market deregulated. So it was almost set up to challenge the likes of British Gas in supply, and the challenge came from very much an environmental basis. So Good Energy existed to help to channel customers' money into building onshore renewables at a point in which they didn't really exist in the UK. In fact, the company repowered the UK's first commercial wind farm, which is at Delabole in North Cornwall. If anyone's ever been blown off the North Cornish coast, you'll know why they put a wind farm there. And that was the roots of the company for a long time, raising money from customers and investors and putting that into building renewable assets. So we've been around quite a long time, and we've been listed for about the last 13 years on AIM. So what do? Well, we do three things. So we are a niche electricity supplier. So we sell electricity to both commercial and domestic consumers. We sell gas to just domestic consumers. We think we have a differentiated proposition because we are genuinely 100% renewable in our electricity supply. So we're not using certificates, we're not using other ways of branding that supply. We can always show that that supply is 100% backed by renewable generators. So we are usually regarded as having the greenest electricity supply proposition on the market. We sell gas to domestic customers just because a lot of people still need gas for their heating arrangements. We have a green gas proposition, so about 10% of the gas we sell is biogas that's injected into the grid, and we have a proper offset product for the rest of the gas we do. We don't sell gas to large scale customers. How do we fulfill that? We used to fulfill some of it from the assets that we had built, so that's where the wind farm in North Cornwall came in. We've actually sold our own generating assets. We sold them a couple of years ago because they had a lot of debt attached to them, and they only supplied about 15% of the power that we sell on to customers. So there was no real need for them, and it was a way of strengthening our balance sheet and freeing up some cash for investment. Where the power comes from is we have a network of over 2,000 small generators across the UK. They are farmers, they're local authorities, they're sometimes charities with rooftops, for example, and we source all of our power from solar, wind, anaerobic digestion and hydro projects, and we are one of the leading players in terms of helping small and decentralised generators get their supply onto the grid, and then we sell that on to green-minded domestic customers and businesses who want to demonstrate their carbon footprint reduction. So we're a niche supplier. We are a very big player in the world of generation, specifically micro generation. So this is people with solar panels on their rooftops or on their business premises. And we are, in that market, the largest voluntary administrator of what's called the feed-in tariff scheme. So the feed-in tariff was the original government subsidised programme to support people getting solar on their rooftops. We've got about 180,000 business and domestic customers in that. So we're paid by Ofgem to administer the scheme, which was around kind of calculating how much money goes back to people and that sort of thing. More recently, we are investing behind this business to actually install the technology ourselves. So we are a solar panel installer across the south of England. We are an air-sourced heat pump installer in many parts of the south of England, and we provide products and services to help people use these technologies efficiently. And then the third area of our business is in the electrification of transport. So, in addition to the way we heat and power our homes, if we are to get anywhere near the climate goals that the UK government has signed up to, we need to electrify our transportation. We are the largest investor behind ZapMap, which is the leading app in the UK for electric vehicles. If you drive an EV, the chances are you have come across it because about 80% of the UK's EV drivers use it. It is a planning and payment app that really aims to cure your range anxiety. You can get in your car and tell it you're driving from London to Edinburgh, and it will tell you where to stop, help you pay for the charge in a lot of cases. And that is a big play for us in terms of the electrification of transport. So that's who Good Energy is, a supply and services business with a heavy focus on the energy transition, which then links back to our original environmental founding. So what's the sort of thinking behind this? Well, here's an economic view of that, which is that we think particularly the solar installation and the heat pump installation markets are likely to offer structural growth through the rest of this decade. So the graph here, and there's quite a lot of good data available on these markets, is solar installation in yellow and heat pump installation in blue. Solar market's much bigger. It's worth about 1.9 billion last year. It's seen a lot of growth because of the high cost of energy in the last few years. We expect it to grow to 4.6 billion, so about 10% a year, at least over the next few years. And that is because, again, the motivation has increased, the technology has got better, and any commitment to greening the energy grid in the UK, and that is a big part of the Labour manifesto you'll hear, has to rely on a significant rollout of solar panels across the UK's energy grid, and a lot more people decentralising their energy play. Heat pumps, again, it is the main technology the UK needs to use to decarbonise its heating. The run rate we need to get to be on our targets is about 600,000 installations a year by 2028, and we've got some way to go because the country did 35,000 last year. There are a lot of barriers to adoption there, some misunderstandings about the technology, a lot of some campaign newspapers and wings of parties campaigning actively against them, but there's a sense that consumers are beginning to adopt it, and certainly we should expect further growth there. So there's an economic rationale for our interest in the energy services market. There is then a consumer proposition which we're chasing after, really. So this is what we think a good energy customer will look like in a few years' time. Start in the garage. So electric vehicles have been the fastest growing category of new car sale in the UK for a couple of years now. We obviously play heavily in that market through ZapMap. ZapMap tells us, so EV drivers tell us, that they are 7 times more likely than the population average to then want to get solar panels on their roof, for the pretty obvious reason that you've become a much heavier consumer of electricity. And obviously we are active players in both the installation of solar panels and then services for that. Once people begin that energy transition, the other technologies they're looking at is then heating. So we're an installer of heat pumps. We're, again, a sort of high quality installer of heat pumps for larger homes. That's where we're focusing. And then finally, you will need your energy supply company to work with you in a different way, because you're going to need to make decisions around when are you going to use the power you're generating, when are you going to store it, when are you going to sell it back to the grid. And new technologies will need to come on stream to enable this flexibility. That is a pretty nascent market at the moment. There are some early adopters doing quite a lot of this for themselves, but we are investing in the technologies that will enable us to be a player for people who want to make themselves much more decentralised, I suppose, in their generation and consumption of energy. So that's a consumer vision. And then why are we doing this? Well, we think it's a growth market, but we also think it makes us a more robust business with a stickier and longer term relationship with our customers. And that is because if we can offer the services across the line here, everything from installation to ongoing running and maintenance, you get to more recurring revenue streams from the customer as opposed to the one-off payments you get from installation. And that sort of helps us break out from the trap that the energy sector had really got itself into in the UK until the energy crisis, which was of a lot of churn of customers, maybe 1 or 2 competitors in the marketplace who weren't that well financed. But on this I think helps us build a stickier and more and stronger business with deeper relationships with our customers. So that's the high level vision. Let me give you a bit of detail on each of those areas and some financials, and then we can go into questions. So let's talk about the supply business. Now we've all, as consumers, probably had to know rather too much about our electricity and gas supply over the course of the last couple of years, given what's happened to wholesale prices. And the sector as a whole, you could be forgiven as investors for wanting to run a mile from, frankly, because what the energy crisis showed were a series of policy and regulation mistakes in the UK, where we had allowed far too many undercapitalised energy companies to set up and, yes, undoubtedly offer cheap prices, but within a week or 2 of power prices leaping up in response to tension in Ukraine, most of those had folded. So we think, running a resilient business for a couple of reasons. One is that we will not take on any larger customer, half-hourly billed customer, until we can back off their consumption against power purchase agreements signed at the same time. So I won't sign up PwC again until I know that I've got power from generators that covers their office usage. So that is one bit of robustness. Secondly, we maintain very high levels of forward hedging. And that's what the PPA arrangements, the arrangements with small generators, allow us to do. Through the year, we're renewing these contracts, we're fixing a price for their energy. PPAs are pretty simple contracts. They tend to offer either one single price or an overnight price and a daytime price to the generator, but at any point in time, without putting down any cash collateral or with a big player in the energy wholesale market, we are forward covering our position, and we have more flexibility in terms of the price we can charge our customers, because we are one of only 3 energy supply companies in the UK who are derogated from the price cap regime. So the Ofgem recognise our support for small investors, and while we undoubtedly can't go mad with this, we can't charge twice what the price cap is because all our customers would leave, we can, both in terms of timing and absolute level of price, move away from what has just become a quarterly set price from the regulator. So that gives us a more robust model. You don't have to trust me for it. Obviously, a lot of people do stress testing as an academic or paper-based exercise. The regulator expects you to do it. We have just been through an extraordinary period of stress in the UK energy supply market, and we have come out on the other side of it, unlike many of our peers. So we've got a lot of evidence that we know what we're doing here, and we're running a resilient business. It's also quite a nicely differentiated supply business for people for whom this is a motivating issue. It's differentiated because of its greenness, so we're recognised by Uswitch and Which as the leading eco provider in the UK. So for green-minded customers and businesses, that is important. These customers often expect higher levels of service, and we are one of only 2 energy companies in the UK with a 5-star rating on Trustpilot. The other one's Octopus, and there's no coincidence there. We were the first people to adopt Octopus's technology, called Kraken, in the way we run our own business as well. So we run a high service, recognised as green supply business for customers for whom that is a motivation. And on the business side, we're seeing increased interest in the fact that we are the only people who can actually time-based match you to renewable. So we can actually tell the energy manager of PricewaterhouseCoopers on an hourly basis what proportion of their consumption is backed by renewables, which is very important for their own communication to their stakeholders, because that is the sort of gold standard in terms of certification of your carbon footprint. So that's our supply business. We think we can run a sustainably profitable supply business, but we think our growth is going to come from providing additional services for people making the energy transition. And the bedrock of those services is the fact that we are, in many ways, the go-to company in the UK for solar generators. We've always been that. We were actually one of the instigators of the feed-in tariff scheme as Good Energy started seeing more and more people signing up for solar. And so, we continue to innovate for feed-in tariff customers. Even though the scheme is closed, it runs on for another 20 years. So most of our fit customers don't actually leave us until 2035. And so one of the innovations we've provided in the last couple of years is that we're the only players there who will actually use your smart meter data and pay you for what you've actually generated, as opposed to the way the scheme originally worked, which was just to assume that you would keep half and sell half back to the grid. So for people on the fit scheme, we can on average pay them 20% more than anybody else does, because we're actually using smart meter data there.
But would you say it's now closed? Does that mean you're not marketing that?
Well, I'd like to take other people's, you can switch, so I'd like to take other people's customers because I think they offer a better service. But no, I'll touch on in a minute. That scheme closed because it was deemed by the coalition to be too generous. Oh, right. And then there are sort of future arrangements as to buying power as well.
So you can still do it?
You can still do it, yeah. So actually what we do, we also now install solar panels. We didn't used to do this, but we've bought a couple of companies, we think targeted very much at Good Energy's traditional customer base, slightly more rural, slightly larger homes. So we cover the south of England in a high-end installation business. And again, for people who've missed the feed-in tariff scheme, so post-2019, we offer products and tariffs to buy your exported energy at usually better rates than the market manages. And that's all really because we see this as the core of our business and our economics. For many larger suppliers, this is something the regulator and the rules force them to do, but they don't particularly wish to do it. Installation is worth dwelling on. I started by saying we think this is a growth market for the next few years. There are a lot of people playing in the installation market. This is solar installation, and we don't want to play alongside them. We don't want to chase the cost curve down to the bottom. That needs doing undoubtedly, but we focus on slightly larger and higher quality jobs, which are more consistent with Good Energy's target market, and build a higher margin business, we think. So the 2 yellow dots on this plot, and the plot is system size and the cost of installation, skew slightly more towards the top right here, because we are focused on taking on those slightly more complex and larger jobs, which allow us to maintain a margin of about 30%, but obviously with a higher level of quality and assurance than the average local supplier can make. We don't outsource this work. We're not just selling our customers to anybody who wants to turn up and put solar panels on your roof. These are all our own teams who come in, our business in Kent. One's based in Kent, one's based in Dorchester. The Kent-based business even has an engineering team who will dig a trench for your ground-sourced heat pump if your Oast house doesn't allow solar panels to go on the roof. So we're very much focused on a slightly more affluent and larger jobs. The same is the case in heat pumps. So we are a heat pump installer, but we are focused on rural homes. We're focused about 40% of the work we do is people coming off heating oil, which is a particularly unloved technology, given the cost and the mess that it implies. And we do, I think, a better job than most in surveying the whole job, in being clear on what size of heat pump and what other changes to the heating system are required. We change on average about 4 radiators per job in doing this. And we also monitor the pumps after they've gone in, so we can stand by that gain in efficiency versus gas there that you can see on the slide. And again, we're trying to build not the largest or the cheapest heat pump installer, but one which maintains a high quality of job and maintains a decent margin for us. So that is the services side, installing green technologies. Most of the solar jobs we do come with storage these days. People tend to want a battery as well as solar panels. We'll even install an electric vehicle charger if you need it, although we're not building a business around doing that. It's a low margin, difficult business, but if you're in the premises in the first place, that's quite an easy thing for us to add. And the last thing to give a bit more detail on is the electrification of transport, which, as we said, is through ZapMap. So if you're an EV driver, you may be familiar with ZapMap. If you're not, let me explain what it is. And at its core, really, it's a data play. ZapMap take data from charge point operators, and there are about 40 public charge point operators in the UK now. It's a very fragmented market. From drivers themselves, from users. The charge point in the McDonald's drive-through near my house has been photographed by a ZapMap user and put on to give someone helpful indications in the dark as to where it is in the car park. And that sort of replicates and actually gives it, this data is hard to come by. Google cannot go out and scrape this data. You need to go network by network and user by user. It's much more sort of complex than that. They clean it and then they make it available in one of 3 ways. There's an app, and we'll talk about what the app does in a minute, but that is obviously the main way in which drivers can use ZapMap. You can license the data, that's called ZapMap Spark, but other people can build their products on ZapMap's data. FleetCor, who are the all-star fuel card people, for example, have an electric fleet equivalent, and that is built on ZapMap, and they're paying ZapMap to license that. And this data has great value, so it's being sold back into the industry itself. Everybody from the DVLA to all the charge point networks all buy data from ZapMap because it's so widely used. It is the best picture of how people are driving and charging electric vehicles. So how does it look? Well, you can see a couple of screen grabs of the app there. I mean, its core functionality, search, plan and pay. So you need to think, I live in London, I want to drive to Edinburgh, I have an electric vehicle. What is the best route for my car? That means that I'm not going to run out of charge. About 25% of the rapid charge points in the UK, you can actually pay for the charge on your phone, so you avoid all the complexities of different memberships and keys. And ZapMap, the app, makes money because you need to subscribe to use some of the more complex functionality and through taking a small clip of any charging that goes through it. A lot of it, however, is free to use. That is very deliberate because ZapMap is still a nascent business and we're trying to grow a platform. And the data would suggest that they are making some good strides in that. So there are about 1.6 million cars on the road in the UK which could have some claim to be a battery electric vehicle or a hybrid. ZapMap's been downloaded 1.4 million times. It's got a registered user base of just under 800,000. So generally we would say that in a given month, a decent proportion of the UK's EV drivers are using ZapMap. And we think that it gives us a fantastic both business in its own right, so it's growing very quickly as EV adoption grows. It has a lot of strategic options, so it has launched mapping in continental Europe, so you can not just go from London to Edinburgh, you can go from London to Lyon. And unlike the energy business, it could be internationalized, and we certainly have significant options with ZapMap, as well as good reach into the electric vehicle driving marketplace, which of course is a core market for us anyway. So a few numbers and then we can wrap up. So we gave results in March. So these are reasonably up-to-date numbers to just give you a sense for what sort of business we are. The answer is quite a large one over the last couple of years. So we've had turnover of about £250 million. However, I am not particularly managing towards that number, and nor is anyone in the company, nor are we guiding investors towards it, because a lot of that turnover is a function of the high cost of wholesale energy. So that will come down. What we did do last year is restore ourselves to a decent level of profitability after the impacts of the energy crisis. We had operating profit of £7.1 million there. A walk across is probably a better way of thinking about the development of the business through the crisis and beyond. We actually had quite a high reported profit in 2022. However, a large proportion of that came from the revaluation of ZapMap as we went out and raised money for it. So nobody would suggest that was our underlying business operation, but that was only slightly profitable in 2022. And that's really because that was the year in which you saw a significant impact of the energy crisis and a bit of a time to catch up in terms of our own billing versus the wholesale cost of power. What's happened since then is that actually consumption has gone down. We've not particularly lost customers. People are just using less gas, particularly gas, but less power as well. And that's been an ongoing impact from the energy crisis. But we did see a recovery in terms of both pricing. So finally, the market caught up with where the wholesale market was. A lot of our contracts had been struck for longer, so we had a bit more of a margin built into that. So that recovered our profitability, and that has allowed us to invest behind the services business as well as absorb some additional costs from operations as well. And so we had a more respectable, I think, profit figure by the end of last year. However, as you're all seasoned investors, you'll know that certainly with AIM stocks, it pays to look at the balance sheet. I mentioned the fact we had sold our generating assets a couple of years ago to really, and with the aim of that was to very much to strengthen the balance sheet. And we ended last year with £41 million, just over £41 million in cash on the balance sheet. We have a small amount of retail bond debt outstanding, less than £5 million, but we are in a very strong net cash position. I should stress that not all of that cash is ours, so about just under £14 million of it is our customers. We are doing nothing with that other than either keeping it to pay for their electricity costs and gas costs, or frankly paying it back to them now that wholesale prices are falling. So I don't expect to sustain quite that level of cash, but nonetheless we have a strong cash position. We can withstand anything that the wholesale market throws at us in terms of our working capital position, but also we can continue to invest for the future. And that really is the summary of us. I think on the supply side, we do have a resilient and differentiated model, and we certainly have a team who have been through an extraordinary period in the UK energy market and come out the other side. But more importantly, we are investing behind what seem to me to be important markets, both for the UK's climate goals and our impact on society, but actually from an economic terms, they will likely be strong growth markets as the nature of the energy market in the UK continues to be transformed over the next few years. I think a Labour government, whilst they haven't been that specific on this, is likely to be directionally helpful to this. We are well positioned, I think, to serve the early adopters and the green-minded in this energy transition. So we'll be, our customers will be some of the first people who want to drive an EV, have solar panels, make the two systems work together. And for those investors for whom a dividend is important, we have a clear capital allocation policy. Most of our capital is going towards growth, but we do pay a small and rising dividend and have committed to at least pay something in every year. Thank you very much. Happy to take any questions.